Baik, selamat pagi semuanya. Mulai tadi malam, saya sempat mengadakan edukasi offline di kantor. Lalu jam 9 malam, saya mengadakan webinar untuk melihat outlook yang sudah terjadi dan yang akan terjadi. Dan malam ini kita akan coba dengan live trading. Mudah-mudahan pagi ini bisa bantu, pagi ini bisa bantu. Kita akan coba untuk masuk ke dalam market apabila marketnya memungkinkan. Dengan catatan marketnya memungkinkan. Apabila tidak, ada keraguan dari Bapak dan Ibu, sebaiknya kita tidak usah masuk ke dalam market. Baik, saya akan coba bahas sedikit apa yang terjadi dan apa yang akan terjadi pada saat FOMC dirilis nanti, sekitar 25 menit yang akan datang. Kita harus, sebelumnya untuk Bapak dan Ibu yang ada di Jakarta, saya akan mengundang coffee break pada tanggal 30 Januari di hari Jumat jam 14 sampai jam 16. Seperti biasa, untuk urusan analisa teknikal, fisiologi trading, dan lain-lainnya akan dibawakan oleh Pak Franky. Lalu Pak Sugi, selamat pagi Pak Sugi. Suara saya jelas Pak, sampai di Rawamangun. Pak, mudah-mudahan suara saya jelas ya Pak Sugi ya. Nanti Pak Sugi mudah-mudahan bisa datang pada coffee break tanggal 30 Januari jam 14.00 sampai 16.00 di Menara Imperium lantai 17. Oke, selamat pagi Pak. Baik, coba kita akan bahas sendiri sedikit permasalahan yang terjadi. Sekali lagi, kalau kita bicara analisa fundamental, sama dengan menganalisa teknikal. Sama, jadi benar-benar kita harus melihat dan benar-benar kita harus memahami apa yang ada, data-data yang sudah dikeluarkan. Kalau kita melihat FOMC itu adalah Federal Open Market Committee, yaitu meetingnya The Fed dengan negara-negara bagian tentunya. Dan kita pun harus melihat data-data yang dirilis oleh Amerika pada saat di bulan Desember. Karena data-data tersebut itu bisa memberikan suatu petunjuk untuk kita mengambil suatu kesimpulan. Ini adalah data-data yang dirilis pada bulan Desember dan bulan Januari. Kita lihat bahwa lebih banyak bearishnya dan netral dibandingkan dengan bullishnya. Kita lihat out of consumer, lalu ketenaga kerjaan, inflasinya masih bearish, housing marketnya juga masih buruk, manufacturing dan service itu ada di ISM-nya itu juga masih buruk. Pertumbuhan Amerika tentunya membaik dan market indikatornya itu masih netral. Ini artinya ini adalah kalau Bapak-Bapak dan Ibu bisa mengamati ini semuanya, ini adalah bagian-bagian yang mempengaruhi. Contohnya, inflasi itu dipengaruhi oleh consumer price, CPI, production price, PPI core, dan PPI year on year. Jadi, kalau kita melihat berapa sih angka inflasinya, itu tentunya kita juga harus mempertimbangkan consumer price, CPI, PPI, dan selanjutnya. Begitu juga dengan perumahan, apa yang mempengaruhi perumahan itu dikatakan baik dan buruk, itu ada housing market index, existing home sale, new home sale, pending home sale, housing start, building permit, dan segalanya. Ini adalah bagian-bagian yang perlu kita perhatikan pada saat kita ingin mengambil suatu keputusan, dan kita bisa menganalisa dari data-data ini. Apa yang dapat Bapak-bapak dan Ibu-ibu bisa simpulkan dari data ini? Apakah The Fed akan menaikkan suku bunga atau tidak? Menurut Bapak dan Ibu bagaimana? Dengan melihat data-data yang ada seperti ini. Kalau kita analisa secara global, maka lebih banyak bearish dan netralnya. Sehingga dapat disimpulkan data yang akan dikeluarkan nanti akan bersifat netral kalau menurut saya. Oke, neutral kuartal kedua baru dia naikkan suku bunga. Yang perlu diperhatikan adalah yang pertama, tidak adanya konferensi pers dan tidak adanya perubahan, dan ujungnya bahwa kebijakan moneter itu akan dibahas di bulan Maret dan tentunya bukan di bulan Januari ini. Lalu apabila tidak adanya sesuatu yang baru, maka akan terjadi penguatan US dollar dan membuat yen menjadi melemah. Apabila, saya ulangi lagi ya Bu, apabila tidak ada sesuatu yang baru dalam meeting ini, maka sama saja dengan terjadi suatu pengetatan yang akhirnya akan membuat yennya naik dan US dollarnya akan jatuh di bawah 1.13. Tapi jika ada kata-kata sabar, maka di Japanese yen akan turun mencapai 116. Ini adalah analisa dari beberapa analis. Analisa dari beberapa hedge fund yang mereka menyimpulkan seperti ini. Tunggu kata-kata patient atau tunggu kata-kata sabar. Sabar kan ya masih lama. Kalau masih lama tentunya ini akan membuat dolar menjadi jauh lebih melemah. Baik, ada pertanyaan Pak atau Ibu? Baik, kalau tidak ada pertanyaan, setelah setelah FOMC akan ada kebijakan moneter yang namanya atau yang dikeluarkan oleh Pak Jimmy tanya, kalau keluar session by XAU, iya. Secara teori fundamental, iya. Kata-kata itu keluar, silakan Bapak by gold. Kalau analis bilang sih kalau yen, tapi intinya sama, adalah by gold. Dan biarkan euro USD-nya naik, saya kira. Tapi kalau tidak ada yang baru, dapat dipastikan Bapak dan Ibu silahkan untuk buy yen atau sell euro. Betul, kalau passion keluar, itu artinya passion itu adalah sabar gitu ya, masih lama kayak gitu naikin suku bunga. Kalau kata-kata itu yang dirilis, maka yennya akan menguat dan dolarnya goldnya akan menguat naik ke atas. Oke. Ada lagi yang mau ditanyakan Pak dan Ibu? Oke, lanjut. Apabila lanjut, maka kita akan setelah jam 2 nanti kita akan bertemu dengan kebijakan moneter dari Bank Sentral New Zealand. Ini adalah datanya. Datanya kalau kita lihat adalah health of the consumer itu adalah bullish, labor marketnya adalah bullish, activity indicatornya bearish, inflasinya bullish, housing marketnya bearish, dan market indikatornya adalah bearish. Kalau kita lihat lebih kepada sisi netral, di mana kita lihat bullish ada 3 dan bearishnya juga ada 3. Inflasinya cukup baik, itu yang menyebabkan bahwa New Zealand ada rencana untuk menaikkan suku bunga atau mengetatkan. Apabila New Zealand nanti malam memotong suku bunganya, sebaiknya Bapak dan Ibu jual New Zealand. Dan ini pasti akan diikuti oleh Aussie. Permasalahannya adalah, kita dapat simpulkan, seperti yang saya katakan tadi, bahwa dengan cut rate-nya Bank of Canada dan QE-nya ECB ini membuat New Zealand akan menganut suatu polisi yang netral, tidak naik dan tidak turun. Artinya, apabila ini netral, dapat disinyalir bahwa New Zealand US dollar itu dia akan menguat. Jika tidak ada perubahan, maka dapat dipastikan bahwa New Zealand USD akan menguat. Banyak juga orang, tapi ini kalau nggak salah ya Bu, itu diselang apabila kita nggak salah bahwa kalau dia unchanged itu membuat New Zealandnya akan naik. Baik, kira-kira itu yang akan terjadi pada 2 jam terakhir ini. Sepuluh menit lagi kita akan coba melihat FOMC meeting. Bapak dan Ibu ada yang mau ditanyakan? Masih ada 10 menit lagi. Ada Pak Jimmy, Pandang, Pak Sugi, Bu Susi, Bu Inga, ada yang mau ditanyakan? Jadi kesimpulannya adalah jika nggak ada yang baru dengan kebijakan moneter yang dirilis, maka ini akan membuat euro melemah dan USD Japanese Yen akan naik angkanya. Ada yang ditanyakan Bapak dan Ibu? Saat ini kalau kita lihat harganya, semua harga yang ada itu stuck, tidak terlalu banyak bergerak. Masih sekitar 8 menit lagi. Baik, kita lihat sama-sama bagaimana dia mengulas. Jika tidak ada press conference, tentunya kita melihat dari statement yang dikeluarkan, Pak. Jadi nanti dikeluarkan statement masalah suku bunga dan dia akan kirimkan suatu hasil keputusan. Biasanya dia langsung lemparkan ke dalam website-nya The Fed.
training inspection. You see those cat meters up on the wall? What cat meters? Cabinets gone, bathroom gone, kitchen gone.
$1 Million Contractor Season 3, Thursday, 9:30 p.m. Exclusively on L Live. Licensed design.
Menikmati tayangan di media seluruhnya. Bayangkan Anda audio dengan kartu Visa bebas di Indonesia. Anda suka.
Baik Pak, nanti coba kita bahas. Biasanya Pak Toro, kita minta bantuan Pak Toro untuk ambil beritanya untuk bisa dicopas ke dalam any meeting.
In just a few minutes, we are going to get the Fed's first interest rate call of the year. Will it be more?
4 menit lagi.
Could the Fed shock the investing world and hint that a rate hike is on the horizon? Hello, everybody, and welcome to this Fed Day. Street Signs, Mandy, still on assignment. Melissa Lee is here with us, along with a full plate of investors to break down the Fed, including Bill Gross, who's also going to lay out one of his favorite fund picks coming up right now. But Melissa, how do we look ahead of the Fed?
As expected, Brian, stocks right now are slightly higher, but really in a wait and see pattern here for the Federal Reserve decision. The Dow Jones Industrial Average is up by just about 1/3%. Take a look at where the 10-year note is yielding, 1.78%. That will be key to keep in mind as we are awaiting that decision. The dollar index is slightly stronger. Gold is about flat. Where the action really is, Brian, today is in the oil markets. We are at session lows right now below $45 a barrel, and that could actually impact the Fed's view of inflation right now.
All right, well, let us bring in now our all-star panel. David Kelly with JP Morgan Funds, ABC contributor Brian Kelly, and our senior economics reporter Steve Leisman, of course, here with us through the Fed decision as well. David, first to you, your expectation from the Federal Reserve.
Yeah, I think we're going to see balanced changes to their assessment of the economy. I don't think we're going to see any change in their timetable when they might tighten. I think they're pretty pleased with where the economy is, despite all the volatility in markets. I don't think they want to rock the boat today.
All right, we've also got Alan Steinheim, Decision Economics. He's their chief global economist and strategist, joining us now. No time like the present, Alan. Do you expect any kind of a change from the Federal Reserve wording?
I think the only thing up for grabs is whether they leave the considerable time language in there and just stick with the language about being patient. That's the key thing now. It was there last time as an add-on. It probably can't be dropped. The rest of it, I think, is pretty much not a big event. Economy's good. Inflation's going to be moving back toward 2%. Temporary changes in inflation. All the action is behind the scenes in the discussions in the last 2 days. I don't think we'll see much of that in the States.
Alan, let's want to point out that you're right, it's not a big event, but I think it should be. I think what's happening here is the market, either the market or the Fed, is increasingly offsides here when it comes to expectations. We just found in our survey that the market now really sees on average a September rate hike, not a June or July one. When you look at the Fed Funds futures market predicting 45 basis points for the end of December 2015 this year, and the average Fed projection at 1.12%, that's nearly 3/4 point hikes. So look, we're going to readjust expectations for sure in March. When you're talking about a rubber band snapping back, I don't think the Fed is going to make any changes here, but the question is, should it be making changes to kind of readjust expectations? Either the Fed comes to the market or the market comes to the Fed, but we can't have this offside situation for much longer.
The Fed is catching up, Steve. The economy is closer to full employment than they have thought. And the economy is getting farther away from price stability. It's going to be hard to get back there. And if they pay more attention to price stability, which I think is the motion of the thematic nature of the Fed going forward, then the pricing of the market of a lower path for a federal funds rate and later rather than sooner will be justified. That inflation rate is really coming down. The core rate next Monday when we get the report, not the core rate, the override rate looks like it's going to be 0.8%, down from 1.2. Wow. Inflation is really coming down. It's going to go negative.
Yeah, 1.5 minutes away from the decision, Brian Kelly, in terms of what that conversation is going to be. Inflation expectations. Oil obviously is sort of the wild card, and the Fed thinks it's a transitory impact. But here we are. We have everybody in the weather saying, you know what, $40 a barrel, $50 a barrel for the next rest of the year.
Yeah, and I think clearly it's going to probably stay there for a bit, and it's also inflationary expectations. Those have come down. The market signal telling you that everybody is expecting inflationary expectations to be down close to 1%. I mean, the Fed is almost half of what they need to be. In my view, the Fed shouldn't do anything, but the market may take this, or they may be looking for some dovish signs. That's the one kind of, I guess, to say, we're short.
If anybody calls oil price here transitory, they need to watch this show more, because we pointed out the inflation-adjusted average price for a barrel of crude oil over the last 25 years, $48. So we're not high, we're not low. We're almost the exact median point of oil over our generation time.
But they mean comparing it to last year, and they mean transitory. So the longer we stay here, then the less it's going to be a concern for them, because you're not, it's like earning costs.
The Fed has medical bills are sending kids to college, they might have a different view on inflation.
But they don't.
But I think that's getting fair. First of all, don't take too much attention to the Fed's on the futures market, because David, you've got a very great comment coming, but we also have a very great comment coming. We're going to get your link right now, so it has to appear with the statement.
Kalau jika tidak ada perubahan, maka ada strong dollar.
Patients are beginning to normalize monetary policy. The language is identical from the December statement, quoting now, based on the current assessment, the committee judges that they can be patient in beginning to normalize the stance of monetary policy. Since the committee last met in December, the FOMC says economic activity has been expanding at a solid pace.
Dia ngerimain patient secara teorinya harus terjadi pelemahan dolar. Seharusnya adalah buy gold. Buy gold.
Business investment is advancing, while the recovery in the housing sector remains slow. Inflation has declined further, the FOMC says, below the committee's longer-run objective, largely reflecting those declines in energy prices. Going on, as far as inflation, it's anticipated that to decline further in the near term, but the committee expects inflation to rise gradually toward 2% over the medium term as the labor market improves and the further transitory effects of lower energy prices and other factors dissipate. The last word on the dual mandate, the committee currently anticipates that even after employment and inflation are near mandate consistent levels, economic conditions may, for some time, warrant keeping the target Fed funds rate below the levels consistent with the committee's views of normal in the longer run. The vote was unanimous. Pearson, thank you very much. All right, we're going to get instant reaction here from Steve Leishman. I want to point one thing out. When we go through the statement, it's a little bit wonky, but maybe it's placed in something, maybe it's total garbage. Steve, you tell us. The last 5 statements that the Fed has come out with, on a word search for inflation, the number of times inflation was 16 in December, 17 in October, 12 this time. Well, can we read into that at all, that inflation is even less of a concern because of this?
Inflation is a big concern, but not on the upside.
Because of the lack
of downside. Lack of inflation, that's an issue. The Fed, I think, is doing the proverbial exercise of holding its breath. And it's going to hold its breath for nearly 6 months. While this energy issue works through, we were just talking about ahead of time, these headline inflation numbers are going to go negative. Make yourself a policymaker here. I want to raise rates. I really do. Institutions want to raise rates. I want to put them back on a path to normalcy. My unemployment rate is coming down. My growth rate is pretty decent. But I have not only declining
mengatakan bahwa nomor itu dia harus bersabar, dan kalau menurut saya harusnya adalah
we may talk about this later. A lot of people who are out of the workforce because of the loss of benefits coming back into the workforce at lower wages. So declining.
Are you saying 6 months on hold, 6 months on hold for any sort of language
until the data catches up with where they want to be?
So you think they're going to remain status quo in terms of their statement until June?
Well, no, because now the honeymoon is over for Janet Yellen. Why? Because she had a year to coast and to hang out and chill under the old regime. She put that word patient in. And now,
berapa stop lossnya? Stop lossnya 1 margin requirement. Tentunya 0,1 juta rupiah. Dan ini adalah di level 12.78 itu stop lossnya untuk gold.
You're in, and I would say the 10-year bond goes below 1% this year. And I'll I thought the beginning of the year, I still think
Dan dia katakan bahwa
But a bit feels the same way you
kan
do.
kita lihat aja.
Right? IT basically says the Fed may never raise
Bapak dan ibu-ibu apabila sedang mengambil posisi sebaiknya gunakan stop loss di
Yeah, let me sober you all up. We're going to get, sorry about this.
Harga 12
The central bank
di bawah 12.78.
and the economy that gives us achievement of the full employment objective is not an economy that a central banker can leave with zero rates, let alone zero rates forever. And they are going to look at inflation as transitory low, and a couple of years from now, inflation will be higher. So it isn't going to be zero rates. The question is, when do we have a small rate hike, and what will the path be? Because the economy is going to get very hot, and it even is getting a little hot now.
Alan, you're on this show in part. Well, I invited you on the show, but more importantly, you have advised central bankers. You advised Greenspan. Now, take us in the room, Alan. Tell me what you're going to tell. You could tell Janet Yellen right now about when to raise rates, especially in the scenario that we just laid out: declining headline inflation, assuming even the unemployment rate drops, there's no wage inflation. What do you tell Janet, Alan?
Zero rates and negative real rates, small positive real rates, doesn't make any sense when you have an economy that is really moving very strongly with good momentum. And so the central bank has to lean against that by raising short-term rates. And that's the history of monetary policy, always a leaning against a strong economy, because inflation will show up later. They don't have to lean too hard. And the fact that the inflation rate is coming down the way it is, partly because of oil and energy, says that they ought to be very gentle and then wait and watch the data before they lean against an exuberant, strong economy.
David Kelly, lack of inflation, apparently a very good thing in professional football, but what about investing? Do we see this being a good thing for equities, for our viewers' 401k plans?
Well, as a loyal New England patriot, I think inflation is an over-worried about issue. But I think the key thing that people need to recognize here is the Fed funds futures market, all these derivative markets are being distorted by central bank buying at the long end. So don't trust the Fed funds futures market when it says we'll get 45 basis points at the end of the year, because that's not what people on Wall Street or economists actually believe. It's not what the Federal Reserve itself believes. That Fed funds futures market, and indeed the inflation expectations built into the derivative markets are also being distorted. So just don't trust those. They're not really telling you where we're headed.
We should note that the reaction in the equity markets, you don't see it in the overall averages, but where you do see it is in the bond market. We got the 10-year yield at 1.768% right now. The CLC, which tracks the bond market, is sitting at session highs pretty much, up about 0.8%. So that really rose on the back of this FOMC decision.
I want to make one more point. The last vote, 7-3. 3 dissenters, 2 on the Hawker side, 1 on the Dovish side. This time 10-0. And I think this reflects the new makeup of the committee. You had a couple of the Hawks drop off. You have one Hawk on now, I believe it's Jeffrey Lacker,
right.
And he decided at this point to vote with the statement. Don't know what maybe promises were made behind closed doors there about what happens in the future.
Last word, Brian Kelly, any trades you put on right now on the back of this decision?
I think you might see update.
Right.
All right, thank you very much to David Kelly, Alan Sinai, Steve Leishman, Brian Kelly. Thank you, Melissa, sticking around, obviously. We're going to see all these guys in a bit. Let's get more now market reaction, Melissa, from the Fed station.
Yeah, Rickson held in the bond pits in Chicago. Let's kick it off with Mary Thompson, who's live on the floor of the New York Stock Exchange. Mary.
Hey there, Melissa. Rick's going to talk about this later, but there have been some interesting moves in the 10-year. The yield initially ticking up after the statement from the Fed, but recently moved very close to special lows, if not at them right now at 1.755. In the equity markets, what we saw is a bounce in the Dow up to about 90 points, as investors expect that the Fed will maintain this accommodative policy for an extended period of time. The Dow moves to about 90 points. It's given up some of those gains since then, now holding on to about a 42-point gain, which is pretty close to where it was right ahead of the Fed decision. We saw the market sell off a little bit. On the S&P 500 fractional gains, they're actually lower than the index, actually lower than it was before the Fed decision. And the NASDAQ Composite, of course, which is getting a big lift from some positive tech news, most notably out of Apple today, holding on to about a 20-point gain. So initially it looked like a positive for the stock markets, but it's given up those gains in light of that, pretty much where it was before the Fed decision. Back to you.
Yeah, but a couple more insights, Mary. Thank you very much. We'll get to Rick in a second here. Dan Greenhouse putting out his takeaways just momentarily. Basically, this is a good report in terms of the economy. He reminds us that job gains were, quote, solid in December, but are now, quote, strong. And the economy was expanding at a moderate pace in December. It's now expanding at a, quote, solid pace. So, you know, listen, the Federal Reserve may get a little more, you know,
he's saying it's good,
dovish on inflation,
right.
but let's not forget the underlying aspect of the economy is getting stronger according to those changes in language. Although Rick Santelli in Chicago, you know, I think I need to, what's another word for thesaurus, right? I think I need to break out the dictionary now every time we have a freaking Fed statement because
Rosetta Stone, I think.
Yeah, because it's like now we're parsing language like Greenspan's briefcase.
Yeah, thesaurus or a giant bottle of aspirin. I guess take your choice.
Or a bottle of something.
A bottle of something. Yeah. I don't know if it's about patience or being the patient, but if you look at 5, 10, 30s dollar index, the only thing I see that's significant here is we've had 9 sessions in 10 since the 20-month low yield close on the 15th of January in 10-year. The bottom end of that range is basically 179. We've intraday traded below many times, as you know, Brian, but if we should close below that, or we should close below about 235 and 30, we've been there before, haven't closed there before, that will be significant. Now, whether it truly has to do with any institutions of the Fed or not, I think what it has most to do with is the notion that more and more traders that I talk to are not looking for a 2015 move. And I think, you know, with my superficial read on what we, I think, kindly call this statement, I don't see any reason to think that that doesn't have an equal probability to be the case. And in terms of the economy, anybody who doesn't feel that we've slowed down a bit from some of the data we were getting before the holidays, I just don't think it's been paying attention outside of things like consumer confidence, where gasoline to those people on the retail level is a bright spot, as evidenced by that strong consumer confidence number yesterday.
Rick, back to you. All right, Rick, thank you very much. Bottle of something, maybe the quote of the day. Now it's time for an interview that you cannot afford to miss. Bill Gross joining exclusively in his first post-Fed interview since joining Janus Capital Group.
And as we head to break, let's take a quick check on the Treasury market. That is where the action is. Note the 10-year yield now at 1.762%. Street Time will be right back. We'll be talking Super Mario on the next block. Not the one flashing loads of cash around in Europe. This guy, who's making loads of dough for Nintendo and could in fact be the company saving grace.
Consumers moving in the right direction. Get real-time insights as Marcus Young and Oriel Morrison cover the day's biggest market moves. Street Times, weekdays at 10 a.m. CNBC. For True Business Worldwide.
As European markets come to life, there's one team you need, delivering the news, views, and market action to get you geared up to trade. Lively debate, dynamic conversation, and where business leaders turn first. Squad Block, each weekday at 2 p.m.
Global markets converge in one place. Worldwide exchange. Carolyn Rock, Wilfred Frost, and Seema Mahdi track the news around the trades and around the globe. Worldwide exchange. Weekdays from 5 p.m. CNBC.
I'm probably the first person to walk on the floor every day and it's empty. And I have this moment. Wow. One of the greatest experiences for me when I first came here was walking down the West Side Highway and seeing Statue of Liberty. And that's when I fell in love with Europe. Where I come from in the UK, the confrontational style is the way in which we have broadcast. Sometimes you just can't let people get away with things that might possibly mislead you. Every day you go home and you go, how do I make it better tomorrow?
I decided over 30 years ago when I started that I wanted all the people at the bottom of the pyramid who had no money. Nobody wanted to talk to them. They weren't that educated. I wanted to help those people because I was one of those people, and I still am in my heart. People first, then money, then things. The Susie Orman Show, weekends on CNBC Live.
Let's get more reaction now to the Fed statement. Joining us exclusively with CBC Newsline and Janus Capital Group's Bill Gross. Bill, it's great to chat with you again in this new year. The last time we talked out in Denver, and I'm going to paraphrase, you said the Fed won't raise rates until the sun in our galaxy goes dark, effectively. Are you standing by that?
I can't remember those words, Brian. I can remember saying that it will be a long time. Let me amend that a little bit. I think sort of agree to some extent with what Alan Steiner said a few minutes ago. I think the Fed will raise rates by 25 basis points sometime this year. Their statement indicates that they still believe inflation will go back to relatively normal levels on the medium term, and they recognize that the economy is stronger. All of those points, but let me suggest that the real reason that they want to raise interest rates, at least symbolically, is that even in the face of this low inflation, they recognize, I think, that 0% interest rates or near 0% money market rates are distorting capitalism, and that the 0% interest rates are moving money into the financial sector for arbitrage profits, and very little that is going to the real economy for investment. And so to begin to correct that, and if only symbolically, I think they want to get off the zero line.
Wow. So let me reiterate that. So you do believe we'll get a quarter-point rate increase sometime this year, if anything, just to teach markets a lesson? But do you think, Bill, that Janet Yellen and the other Fed governors care about teaching the markets a lesson?
No, I didn't mean teaching the market a lesson. I did mean that I think they're coming around to the view that 0% interest rates distort capitalism because it produces very low returns on investment in the real economy as they follow interest rates down to the zero level. Same thing's happened, obviously, in Germany and some of the Euroland economies in a negative way. They have negative interest rates, and so there's very little incentive for investment in the real economy, which speaks to plant and equipment, new innovation, and so on, because the returns are so low. So I think if only symbolically they want to produce an interest rate hike that speaks to that in a roundabout way.
25 basis points sometime this year, Bill, is a pretty wide forecast. It's not very specific. When do you expect this hike to happen, and what will we need to see on the inflation front, and in particular on the oil front, in order for that to happen?
Melissa, I see it sometime around June. I mean, most Fed governors and market participants, Fed participants have suggested June as a satisfactory point, and absent further declines in oil, which you mentioned, and absent further deflationary conditions in the Euroland, or perhaps surprises from China in terms of their growth rates, which I think all are important, and in combination a continuing strong dollar, which would be deflationary here in the United States. I think they stick to this June or perhaps the meeting after June because they want to send a signal to the market that the real economy is important as well.
And as we pointed out from their words, Bill, the economy, according to the Fed, does seem to be getting better. Words like moderate became solid. Words like solid became strong. How much of the Fed's job is it to get ahead of the curve? Instead of waiting for inflation, don't they need to in some way anticipate? Because most data is backward-looking. Some of it considerably backward-looking.
Well, it is. The Fed does try to anticipate, and it's here where I would disagree with the Fed in terms of their expectations. Remember the dots, Brian, that come out periodically when there's a press conference from the Fed members, and those
Perkeratannya agak membosankan,
long-term inflation rate is
tidak terlalu atraktif
long-term real interest rate for Fed funds would be close to 2%.
Satu data besar lagi yang akan jual masuk.
I disagree with that for a long time. I think there is a new neutral rate that speaks to perhaps a cap of Fed funds at 2%. going forward. Right now, the market thinks that the Fed will reach 2% by 2019, by February of 2019.
Meluncur duluan.
I don't disagree with that. So I think that the pace will be very, very slow. And if 2019 at 2% is the number, then the Treasury market is fairly priced. It doesn't mean that you've got a huge capital gain ahead of you if you're an investor in Treasuries, but it means that it's fairly priced if the Fed moves at that slow price.
You know, this question comes from a viewer via Twitter, Bill, and it's a better question than I could ask, so I'm just going to steal his question, David Duran, which is, do you believe a rate increase is needed in the market more than just symbolically? Do we need a rate increase for any sort of fundamental market reason, or would it literally just be a little more symbolic?
Well, I do. First of all, it would be symbolic. It would tell investors that there's a necessity, and this speaks to the real reason, there's a necessity for savers and investors to receive a positive return on their money. At the moment, 0% short-term rates or near 0% short-term rates produce a negative return on money from the standpoint of inflation. And so, at some point, they've got to move closer to an inflation rate, a future inflation rate, in order to allow savers and therefore investors to take risk in the market. That's what capitalism has been all about. Capitalism for centuries has been about the hope and the expectation that you can receive a return on your investment. And right now, that's not the case. So I would agree with the tweet that there's a symbolic reason, but also a real reason. Savers need to make some money.
What do, Bill, let's say that you are correct and that the Fed will raise interest rates in June. What does the bond market then look like? I mean, the bond trade, one can argue, is one of the most crowded trades on the planet right now. We're seeing the PLT, the ETF, the track bonds sitting close to 52-week highs. Everybody's in this. Is everybody going to want to get out?
Well, I think that's the danger ultimately. If in particular, Melissa, if Europe and Euroland, grows at a stronger pace than currently expected. Treasuries are directly linked to German bonds and high-quality investments over there. And, as Draghi has suggested, that they're not going to move off the zero line for a number of years. And so, if the bond, the German bond, the 10-year bond, continues to trade at 40 basis points or lower, then Treasuries, even though a low interest rate and seemingly very artificial, as your question indicates, probably will be anchored by what's going on in the rest of the world, and especially in Germany and the United States.
So it's a safe trade thanks to the turmoil elsewhere.
I think so. A lot of money is going to be spent in terms of quantitative easing, or at least that's the expectation. Japan is, continuing on their path, and so that money will flow back to the United States as a safe haven and as a more attractive yield relative to their alternatives. And while I would continue to suggest that those are artificial yields, and at some point, like you suggest, you better be careful about squeezing through the door. I don't think that occurs for the next 6 to 12 months.
6 to 12 months, all right.
Well, unfortunately, we have to make our sortie, our exit. Bill Gross, hey, Bill, it's a real pleasure to chat with you again. I know it's a busy day for you. Thanks for making some time for us, all right?
Thanks, both of you.
Take care.
All right. Well, don't let the Fed dominate too much of your attention, because we are still in the middle of earnings season, and the earnings squad takes over next with 3 big names you need to watch before they report.
And later on, forget too big to fail, why too big to hack could be the #1 concern for your money going forward. And check out oil, folks, with the Fed decision. Oil moving down again, another multi-year low hit. We traded as low as 44.08 for crude oil. We're down right now 4% to 44.31. We'll get to the oil flows here in just a few minutes. Talk about inflation. That, my friends, a lack of, at least for commodities. We're back right after this.
This is all being done actually ahead of the Chinese Lunar New Year, falling on February 19th. So To the extent that people were talking about the iPhone 6 as being a gift of choice for the year-end holiday shopping period, clearly you've got more momentum going into what's going to be a critical first quarter in China for Apple. To the extent that Apple is now in with a phone that's as large, if not slightly larger, certainly there's a great deal of pent-up demand for Apple. We expect this momentum to continue.
Stronger dollar crimping the results of some companies over the US, so will a weakening euro end up helping companies on the continent? It's European Earnings Central here on Capital Connection.
Ricky Fowler entered 2014 with big changes and high hopes. A revamped swing propelled him to a personal best, 10 top 10 finishes on the season. Fowler performed his finest during the majors, with a top 5 finish in each one, becoming the first player since Tiger Woods to accomplish that feat.
Ini terbawa dengan harga komoditi yang melemah.
Watch the PGA Tour all season long, right here.
Tapi nanti kita lihat aja, karena kita akan taruh stop loss di bawah 12 di 8.
Market and economic information that impacts your money. On the money this weekend on CNBC. Unlock game. This one's for my family. This is war. Take that, Captain. Get it up and on you. Don't miss the next epic battle.
I am the ruminator.
The Tonight Show starring Jimmy Fallon, Saturday from 9 p.m.
For the earnings squad joining us today, John Ford, the co-anchor Squawk Alley, and fast money trader Brian Kelly. So let's kick things off the scorecard. Of the 29% of the S&P 500 firms reporting so far, 70% reported above estimates, 10% met estimates, 19% reported below estimates. Let's kick it right off here with the big one after the bell, John, and that would be Facebook.
Facebook. Well, the truth looking for $3.77 billion in revenue, 49 cents, I think it is, in EPS adjusted. Two big factors here. One is currency. Unlike some other companies last quarter, Facebook talked about currency, the 7% euro drop, and so they factored that in to this quarter's guidance. So it fell a lot more since then. So in order for Facebook to overcome that, you're going to need to see an iPhone-like quarter for them. What that would mean is such strong demand among retailers over the holidays for targeted advertising that they were able to have a whole lot of pricing power. That is possible because discounting happens so much and retailers are having such a hard time at the end, but we'll have to see that come through to balance things out. And guidance could be the key area to take a hit because the U.S. fallen so much in January.
Well, and guidance on spending. Keep in mind that since the third quarter, when they reported, Facebook shares are down 10%. And on that earnings report, Brian, I don't know if you remember this, but after the bell, the stock really took a tumble because of the commentary about spending. That spending would be up very sharply. Zuckerberg had talked about investing aggressively. Then the CFO comes on and says R&D spending will rise 65% or grow 65%.
Belum ada yang terkena stop loss-nya kan?
These are big line items that in this market, investors aren't going to take that well.
Lihat saja beberapa waktu ke depan nanti.
Same type of business model. Spend as much as you can, get some revenues in, but don't worry about the bottom line. In this market, I don't think investors will like that very much if Facebook comes out with a big expense item.
Yeah, let's talk about Qualcomm here. That's another one that we're expecting after the bell. This is a company that John, I know, knows well. This is a stock that's been basically flat for the past year. They came out in November and said that for the full year, chipset revenue growth would be a little bit less than what analysts have been expecting, 3 to 9% for the current fiscal year. The big question at this point that's surfaced over the past month or so is, did Samsung drop Snapdragon from its newest line of
Mudah-mudahan
phones.
tidak kena
Because if
SLA,
it
Pak.
did, that could be for the full year 3 to 4% of chip sales for Qualcomm. So that's going to be a big issue in that conference call. And of course, any update on China and the investigation into the fees it charges for its patents, that is a huge
Jika Bapak lihat, SLA itu kita taruh
That's why this has been
di bawah moving average 200 di SL-nya itu kita taruh di bawahnya moving average di H1, frame H1 itu di moving average 200. Di bawah itu adalah stop loss-nya, jadi mudah-mudahan itu tidak menyentuh dan harga bisa berbaik lagi ke atas. Misalnya asal gold, kenapakah kita bisa buy gold kembali, Pak? Itu tetap harus lihat, Pak, nanti di jam 3, karena gold turun itu karena New Zealand ya, sebagai negara komoditi tentunya, bersama dengan Aussie, itu sekarang dalam keadaan tertekan, sehingga saya bisa pastikan kalau New Zealandnya kembali ke atas, tentunya akan lebih mudah untuk gold untuk meneruskan rally-nya. Sebaiknya jangan dulu di buy apabila terkena SR, karena kita harus melihat Bank Sentral New Zealand. Kira-kira seperti itu, Pak. Mudah-mudahan mendekati jam 3 nanti harga bisa di atas 12.85. Apabila itu terjadi, maka yang terbaik adalah di atas 12.86. Apabila itu terjadi, maka ini bisa menjadi trigger. Landasannya adalah 12.85 atau 12.8490. Yang gue agak tertahan memang karena cross dengan Aussie.
Sekarang semua bisa menyaksikan acara favorit masing-masing. Kemudian berbeda tiap TV, kualitas high definition, tanpa biaya paket tambahan hingga 4 decoder. Untuk berlangganan, hubungi First Media sekarang.
Get ready to be styled to rock. For these 12 designers, it's a chance of a lifetime to make their dreams come true. Welcome to the fashion industry. They'll create outfits for some of the biggest stars on the planet. This is it. And only the best will get one step closer to landing the ultimate fashion dig. Executively produced by Rihanna and mentored by Pharrell Williams. Find out who will become Rihanna's celebrity designer on Style to Rock. Double episode premiere Wednesday night at 8:45 on Star World. Ajak 10 teman menjadi pelanggan First Media. Dapatkan hadiah istimewa mesin Nescafe Version Khusus dan voucher belanja hingga Rp500.000. Ayo, gabung sekarang.
You might have just seen the big flashy red headline during the commercial break on oil settling 44.47, down 3.8%. That is the lowest close for oil since March of 2009.
Oil turun lagi ke level 44,45.
Demand way too much supply. According to the U.S. government, we grew 8.9 million barrels of inventory last week.
That was double what was expected.
Double what was expected. The biggest weekly build in at least 30 years, and we are 49 million barrels up from a year ago, according to the government. You want to talk about economics? This is Econ 101. Way too much of the stuff. I wonder what you could really buy a barrel of oil for right now. I wonder if you can go out and get one for 25 or 30 bucks.
Yeah, exactly. I'm sure.
Sebelum mengatakan bahwa minyak akan kembali ke level $65 per barrel itu pada tahun 2016.
WTI, West Texas Intermediate crude, what we trade here, is probably going to be close to averaging $40 a barrel for most of the first half of 2015. That's nothing for the graphic. But for most
kita bahas
of this year,
New Zealand. Ini adalah data New Zealand, di mana apabila tidak ada pemotongan suku bunga, apabila tidak ada pemotongan suku bunga, dapat dipastikan New Zealand akan naik. Apabila tidak ada pemotongan suku bunga, maka dapat dipastikan bahwa New Zealand akan coba naik, kata beberapa analis. Ya, kita lihat goldnya sudah kembali. Ya, seperti inilah gold. Pergerakannya agak fluktuatif, sehingga kadang-kadang membuat jantungnya pada rontok ya Pak. Dan ini adalah kesimpulan daripada New Zealand.
If they got hacked, it would create a huge problem for the entire country. Our guest says there are such companies.
Interesting. All right, plus a former governor explaining why the huge student debt load is bad for the economy. He'll be joining us coming up on Street Time. Stay tuned.
Getting a date has never been this hard. I'm not talking about me, the Fed is keeping investors guessing about when rates are going up.
We're going to call with Governor Bonella when he reckons the U.S. central bank will next year.
In generalized China, yes, there's certainly is price sensitive. Maybe that's why you've got guys like Xiaomi really going on that low end. But we have to keep in mind that in, tier one cities, for example, in China, there's an upper crust of that consumer segment that, goes after Apple. They have a disposable income and it's a big status symbol. So in that sense, they don't necessarily need to go to that low end play. They can continue to command that high end. And if anything, being a higher priced product actually makes it even an incremental higher product in China.
As European markets come to life, there's one team you need. Delivering the news, views, and market action to get you geared up to trade. Lively debate, dynamic
we're here to help you get up to speed very quickly.
You got to be fast because the markets are moving.
And you get to talk to some of the brightest investors and smartest people in the world.
Did you believe that he said that on Fox? A new season. Golf bets teed up as the race for the FedEx Cup begins again.
The wait is over for Jimmy Walker. He makes it to the winner's circle.
Watch all the drama unfold with 500 FedEx Cup points on the line at each tournament. Welcome to the 2014-2015 PGA Tour season.
On the money. Interviews the people making the news and brings you the latest market and economic information that impacts your money. On the money this weekend on CNBC. I'm okay. These ones are my family. This is war. Take that, Chapters. Get it to out of you. Don't miss the next epic battle.
I am the Dominator.
The Tonight Show, starring Jimmy Fallon. Saturday from 9 p.m. In the last couple of moments, a big move in the bond market. Look at that. The 10-year benchmark treasury getting a lot of buyers coming in all of a sudden. The yield falling to 1.73%. Look, you can see the last couple of minutes,
Yeah.
we're seeing a big move in the bond market.
Right, and take a look at how a lot of traders out there are expressing this move. And the PLC, which is the ETF that tracks the bond market, this is a move of almost 8%, pretty much on the back of that Fed decision. It is up by about 1.5%. This is a new 50-week high. Don't know if it's a short covering rally at all, play into this, or if it's just the security. The Fed is not going to do anything for a little bit now.
All I know is that if you are listening or watching this show and you are a real estate agent or a mortgage broker, I want you to immediately stop what you're doing, unless you're driving, stand up, hug somebody.
Rates are going to remain low.
Mortgage rates are going to go even lower. Refis are going to boom. New buyers are going to come into the housing market. Stand up, hug, not inappropriately, but just a nice, a friend hug, maybe a bro hug with a slap on the back, and do something like that. Express joy.
The other two things interesting in the market, if you take a look at the Dow Jones REIT ETF as well as utilities, they hit a new high in today's session also. So there's no concern that rates are going to be a threat to investors looking for yield. They continue to pile into these instruments that have worked so far.
Any REIT is going to work spectacular right now because they're maybe yielding 4 or 5%. Everything looks great, except if you're trying to save money safely in America, good luck, as Bill Gross sort of hinted at in our interview. Approximately 5 billion so-called connected devices will be in use this year. Those are all those things now that we use that send and receive data from the interweb. That number expected to surge to about 25 billion such products in 5 years. What that also means is that these companies are putting more and more crucial and private information onto the internet. Are some of those companies too big to hack? In other words, if they are, would it create a major economic impact? Joining us, Adam Tobin of Trust Layers. Adam, we're almost every week now, we're getting a big company was hacked, let's watch out story. As we get more and more onto the internet, how is this going to create a major macroeconomic problem?
Well, I think it's a really good question, Brian. We've really seen an explosion this year in 2015 of companies that, as you mentioned, are collecting a tremendous amount of data under their roots. And that is something that you can't spend all that time just reacting to the breaches after the fact. We see the need for companies to really be proactive about that. It's important to do it because the more data you have, health data and consumer data and citizens data all under one roof, you really get into situations where you have to proactively protect against its misuse, because it's incredibly important to the health of companies, but also consumers. It's really becoming a national interest.
So, Adam, let's drill down on this, because what the FTC, as I understand it, is saying is that it is the devices and the companies that make devices that have an obligation to embed security in those devices. Where do you think is the greater threat? Is it hacking those individual devices, which could be anything from a heart rate monitor to a Fitbit, which then transmits medical data to your doctor, or is it the companies that simply house the data, so the companies that own the server farms? That's really the issue here.
You know, Melissa, it's a really good question. Hacking one device, nobody wants that to happen. But if you look at it on a very pragmatic level, that's one person's information. It would be horrible on an individual level for very sensitive data to get out there. The real danger comes when companies are collecting all of that data, the quantified self, all the information that you mentioned from those connected devices. When the companies are collecting that all under one roof, there's a few dangers there. One is just it all gets assembled together, and as you said, they become too big to have. The other danger is that there's a lot of predictive segmentation, predictive algorithms that are run on all of that collected data, and companies need to be a lot more proactive about the monitoring of the use of that data. So it's not just about getting ahead of the breach and making sure that you're proactive in protecting against the breach, but it's also about being proactive, about understanding how that data is being used, so we can restore a little more confidence in the use of this big data and all this collected data sitting under one roof.
Adam Tobin, Cross Layers. Adam, big stuff, kind of scary stuff too as well. I'm wearing a Fitbit right now. When I get home, I'm going to take a hammer to it. Adam, thank you very much. Well, if you or your kids do not have student loan debt, you may not think you have to care about the issue, but former Indiana Governor Mitch Daniels is joining us next. That's why everybody actually needs to care.
Yes. But win or lose on Sunday, which team's home state has the better economy? The battle that really matters: Washington versus Massachusetts. That's next.
Anything can happen between the bells and the U.S. trading day, but what happens during the last hour could be what matters most. Live from the floor of the NYSE as the last drink rings in, closing bell, Tuesdays to Saturdays at 4 a.m.
I do believe that Apple is going to continue acquiring. They spent $500 million here, $300 million there, and they build up from the context of what they call strategic investments. I don't discount that they could possibly do a large acquisition, but I don't believe that's really their normal way of doing things. Secondly, with that kind of cash flow, you can bet that they're going to return part of that cash back to the shareholders.
He's Italy's youngest ever prime minister. Matteo Renzi opens up about economic reform,
This is not a compromise, this is a revolution.
his place in the EU,
The idea of a country as a place of potential change is very powerful.
and the fight against terrorism.
If you attack Paris, you attack Europe. You attack the idea of a community.
That's all coming up on the CNBC Conversation.
I wanted to be able to explain things to people so that they could be independent of me, so that they could be strong and in control of their lives. And to this day, that's what the Susie Woman Show is all about. It's about how do you become the powerful person you're meant to be with who you are and what you have. People first, then money, then things. Weekends on CNBC Life.
Unfound it. I David I'll give him Jimmy Fallon. But fuck the lies, Pat Noble, and friends and cousins.
Hey everyone, I'm Jimmy Fallon. Tonight's a weekend on CNBC.
We've got to talk more about this big move in the bond market. Really, the last just few minutes. Joining us by phone on last minute notice. Thank you. Is Dan Plus Luna Sales. Dan, we do appreciate you joining us. I'm looking at to Melissa's point, the TLT 20-year Treasury bond fund up 2% or 1.5% up 2 points right now. What is
Well, somebody wanted to go along, that's for sure.
In a big way, Dan.
And there's also, even though it's the Treasury market, thinner than it used to be. I wish I could say the same, but it's thinner than it used to be. And I would guess that the specific instigator of this was a few words tossed in to the announcement after the meeting today that had not been there before. They'd been in the minutes, and that was a reference to the international situation. And the reasoning behind that is how long will the Fed be able to delay raising rates? Well, you've got the standard stuff, the employment and the inflation, but off the beaten track or outside of their mandate in the sense is the situation internationally, which is quite frankly a worry. And it's complicated, much too long to get into right now, but it seems they've been getting more concerned with this. It's been in the minutes, but it's not been in the statement.
So walk us through, Dan, if the Fed is getting more concerned about the international situation, as a bond investor, then I think that perhaps there is more pressure on the bond market and therefore in a bigger flight to safety in the U.S. Treasury market. Is that what's happening here?
Exactly. So you have that pressure. Now, what happens if, let's say, the Fed says, okay, let's let rates go up? What happens to money in Southeast Asia as the increment? It leaves. It wants to go to dollars now for even more yield. And if you compound that on top of some of the worries in the world, you've got a real problem. So you don't really want to yank money out of the developing world, bring it back to the developed world, because they need it. We've got a surplus. They need it. And so if you raise rates, you just make matters worse. The Fed's in a box. They really are. I don't envy them, because someday the inflation numbers will start to kick in. I don't know when. There is a lag built into those numbers, and there are some reasons right now to say, well, no, wait, they're going to start to bottom and rise. And you can only keep changing the employment targets for so long.
Right.
So this international thing, which I venture to say is, in many respects, more powerful than small moves in the inflation rate or the unemployment rate, is now being at least put out there publicly. I think it's been, I would guess, discussed for well over a year.
Sure. Dan, we got to leave it there, but we do appreciate you phoning in on such short notice. And appreciate
you're very, very welcome. Thanks for having me.
Dan Fuss in the sales. Let's get to Rick Santelli, who's covering the CME and this move in the bond market that we're seeing. Rick?
Yeah, I'll tell you what, this is a very, very significant move in the long end of the market. I'll give you a quick rundown as to what traders are telling me is the main reason, and it's mostly technically, we could argue what the catalyst was. Looking at intraday of 10, you see we're hovering at 173. Open the chart up to roughly mid-January. We're looking at a fresh path, potentially, of a new 20-month low yield close, currently at 171 for those of you that look at the late cash market settlement. And even if it only settles under 179, it breaks a 9-session streak. The 30-year is much easier. Look at the intraday, hovering at 230. This is, for all practical purposes, now 6 basis points under what would be a new all-time historic low yield post-World War II yield close. And that is not only making some of the slight shorts panic, we're hearing new asset manager-driven buying, and it really looks like it's substantial.
Rick, very quickly, is there one firm or person or fund that would have the power to make this kind of move in the bond market, or would it have to be a group of people all coming in at the same time, maybe figuring things out at the same time, or could one person or fund do it?
Now, you know what, obviously that could always happen, but considering what's been going on with the low end of yield range the last 9 days, I would think this more as a group activity.
Rick Santelli, Rick, thank you very much. Appreciate it, buddy. Okay, so keeping our eye obviously on the big market move in bonds recently,
But we also want to talk about the issue of student loan debt. Former Indiana Governor Mitch Daniels will join us. That's why we all need to care. Stick around.
It's all about being connected, following capital flows around the world. Sri Chitaraja and WFU Business keep you up to speed on what's moving global markets. Capital Connection, weekdays at 1 p.m. on CNBC.
No going with the flow.
Oh my goodness, there's a
Oh my goodness! No such thing as bad weather.
That's absolutely extraordinary.
And no turning back for the world's top sailors.
What an extraordinary race they've had.
Sails are up for a great ocean adventure.
You can't really get any more extreme.
Extreme Sailing Series. This weekend. On the Money. Interviews the people making the news and brings you the latest market and economic information that impacts your money. On the Money. This weekend on CNBC.
You just made a comment off camera, make it on camera, get it from them.
Are you ready?
We traveled all over the world. Seen some amazing things. And met a lot of characters along the way. Thank you, everyone. Thank you. Here we go. So we know people. Happy holidays. And the more we know, the more we want you to connect with them. They're exciting stories. They're fun experiences. And they're inspiring on the side. It's all about the party. National Geographic presents Nat Geo People. We throw away tradition with a new breed of people. And lifestyle stories. And bring it all home. It's unlike anything you've seen before. But underneath it all, we share more in common than you think. So embrace our brand new channel, Nat Geo People, where you get a real taste of life.
With college tuition on the rise, more students in debt is no doubt a growing concern. In fact, according to the Federal Reserve, educational debt has reached $1.3 trillion this year. Our next guest is out with an op-ed in the Wall Street Journal on how student debt harms the economy. Mitch Daniels is a former governor of Indiana, currently the president of Purdue University. Governor, thanks so much for joining us.
Glad to be here.
Obviously, when you start off life with a whole lot of debt, it makes it much harder to do anything. What's your greatest concern about this?
It's a long list, Melissa. We already know that it's hurting consumer purchases. Today's young people have lower incomes than their predecessors, not higher as we've always experienced. We know it's weighing on housing. They're postponing marriage, childbearing, and home purchases. And now we discover that it is pretty evidently limiting the percentage of young people who start a business or try to do something entrepreneurial. And that's maybe as big a long-term worry as any, because we've counted on American inventiveness and innovation to cover over a lot of the other economic problems we've inflicted on ourselves.
So there's a generational impact here. In terms of the economy, there's also the impact potentially of these loans being in default, because there's pretty staggering statistics out there. Student loan 90-plus days delinquency rates are at historic levels, just according to the Federal Reserve Bank of New York, as well as Experian. I mean, are you concerned that there's a broader impact? Maybe this is the next sort of ticking time bomb in the economy, these defaults.
Every citizen and taxpayer should be concerned about it, and especially the young people themselves, not only who are struggling with these debts, but who are going to have you're quite correct, there's no question a lot of these loans are not going to get paid back. It'll be the next big burden on them really throughout their lives, in addition to the $700,000 of lifetime debt service that they're already saddled with by the programs in place today.
But do you believe, Governor, that college costs are in part so expensive because there's such easy credit? You can charge whatever you want because don't worry about it, just borrow the money.
No question. This has been well documented by scholars for some time that matches your common sense that this market's a lot like healthcare when you think about its features. People believe it's a necessity. There's been little or no price elasticity. People are insulated against the cost by the flood of subsidies. And but the chickens are home to roost now. And, you know, Purdue University, we're in the middle of a 3-year tuition freeze. We've cut the cost of room and board twice. We're working to reduce the cost of textbooks. Everybody's got to get on board with this because the machine will go tilt otherwise.
Governor, great to have you with us. Thanks so much for joining us.
And by the way, the new president of my college, Virginia Tech, is one of the former heads of Purdue. So it's a nice connection there. I like it. Thank you. All right, very special street signs tomorrow. Mandy is going to be back from a much warmer location. She'll be live at the TD Ameritrade Investor Conference in San Diego. Lots of big interviews and interesting guests.
I thought I was in San Diego. In the meantime, I will see you tonight on Fast at 5, full coverage of Facebook earnings.
I can't wait. Thanks for joining us.
All right. Golden Bell up next.
Thank you guys, and welcome to the Closing Bell, everybody. I'm Kelly Evans down here at the New York Stock Exchange with my pipe and my trench coat and my Sherlock Holmes hat, trying to figure out what's going on in the market right now.
I'm going to Chief playing Sherlock Holmes. I'm sitting here with a Rubik's Cube trying to figure it out, make it all make sense and work. 2 reports out today that had an impact on the market. Clearly, the Fed statement, which we'll get to in a moment here, had an impact. We saw the price of oil move lower. We saw yields on the 30-year Treasury go to all-time low territory. But earlier in the day, we had inventory numbers on crude oil, which were in...
Look at, there's the 30-year.
There's the 30-year.
2.3%, the 30-year, the long bond.
229 now.
Look at that.
Wow, I feel like bringing Rick Santelli at this moment. So we'll bring it in just a moment here. There's crude oil. Inventories were higher than expected. For crude oil to push prices even lower, we're almost at a 6-year low right now on WTI.
They keep pumping oil, Bill. We're going to talk about all this. An hour from now, another huge earnings report is due. You just heard Melissa mention it. It's from Facebook this time. The social networking giant trading higher ahead of those closely watched numbers. We will get them to you first with top analysis from the street.
And he's a billionaire who flies on private jets. He has a huge home, and he's made headlines when he did this last week. America's lifestyle expectations are far too high and need to be adjusted so we have less things and a smaller, better existence. We're talking about Jeff Green. He'll be here exclusively to clarify those remarks. You certainly don't want to miss that coming up.
A lot to watch out for in the markets right now. The Dow Jones Industrial Average eking out a small gain of about 4 points. Now remember, its outperformance relative to the S&P has a lot to do with Boeing beating on earnings. No shares up nicely today. The broad market index, as you can see there, is down. We're in the red. It's off a quarter of 1%. Obviously, a lot better than the trading activity we saw in Greece this morning. That was the concern before we turned our attention to developments here in the NASDAQ, up about 0.2, helped, of course, by strong performance from Apple.
I said I'm sure Apple shareholders would love it if the company could report earnings every single day.
Just how many phones are made, like a bar every day. Here's how many phones are made.
Incremental numbers there. Let's talk about it. Shall we try and make sense of all this in our Closing Bell Exchange? We have with DR Martin from Money Map Press joining us, DR, as you know. Jack Barugian from Index Financial Partners is in Chicago. Beth Ann Bobino from Standard & Poor's is with us here at the big board. We have Leisman and Santelli joining us as well. Steve Leisman, the Fed statement. No surprises. Market kind of responded in an odd way. What did you make of what they had to say today?
You know, let me set the table here a little bit, Bill. There is a big debate going on among economists, and you can see it in the market. And I, too, want to hear from Rick Santelli about why it is they're rallying in the bond market. So there's a big debate about what was in this statement. 3 changes. They upgraded the economy from expanding at a moderate pace to expanding at a solid pace. That was 1. 2 is they said inflation is falling further away from the goal, largely because of energy prices. So let me stop there before I give you the third one, which is what you have is they're getting closer on their employment mandate. They're getting further on their inflation mandate. The third thing is they added international development to one of the things they assessed. When it comes,
wait a minute.
Let me just finish up here. When it comes, so I made a chart here. How did markets react? What is the conflict going on in markets right now? The euro, it sold off. That's a hawkish time. Bonds, they rallied. That's a dovish time. Stocks sold off. That's hawkish. And then the Fed funds, which admittedly is a subset of bonds, that's dovish. So a real conflict going on. Push me, pull you in this market about how to react. Something for everyone. Something for the doves. Something for the hawks. And ultimately what I'm hearing is people saying, you know what, June is back on the table because of that solid tape. That's beautiful.
Hang on a sec. Before we get right to your reaction, through the lecture as I see it, Steve, there's only one way to interpret the market action, and that is dovish. The dollar is down.
I don't know.
Down. Crude oil got whacked. Rick Santelli, here's what I want to know. Why is it
crude oil
that you take out a considerable period, you put in patient, and somehow the market now interprets this, despite every Fed member voting for it, as indicating that they may be slower here to move? Is that the only possible conclusion for the market's reaction here?
No, I came up with something different, and Steve nailed it on the last one. As I called around various asset managers and some of my sources, I never had such a unanimous answer. Why? And here's what they said. I'll read it because maybe not everybody saw the statement. This assessment will take into account a wide range of information, including measures of the labor market, indications of inflation pressures, and inflation expectations. And here it is. And readings on financial and international development. Those last two words for traders are synonymous with it's not looking good. There's a light coming at the tunnel, and it may be a big train.
Well, that's my point, Rick. It doesn't matter what the reason is. The net result is what? That they think the Fed's going to be more cautious than it did before the statement crash.
No, but it really isn't about the Fed. It's the relative value trade on steroids. What traders are taking into account is that if Europe continues to deteriorate and the relative value trade is on, it is going to draw these yields down, and they're getting in front of that trade.
Well, why does underneath those conditions? That is a hawkish sign to me, Kelly. I don't think.
But I mean, Santa Claus in the statement for them. That's why they've had to lazy money trade for years now. They have to work a bit harder.
Stocks actually, after the Fed statement came out, but they went down. So we had a little stutter step there going on. Beth Ann, just yesterday we were talking about whether the economy was actually slowing down after that weaker than expected durable goods report. We had the news from Caterpillar that the strong dollar and weak oil was slowing them down, among other companies at the same time. Now we get this Fed report that says the economy is growing at a solid pace. Make some sense of this for us, please.
Well, we at S&P have been thinking that the U.S. economy is moving on rather nicely at a brisk pace. Look at the jobs numbers. Over close to 250,000 monthly job gains last year. You're seeing some strength there. You see housing picking up. The new home sales were pretty nice as well. So I think that while we're seeing a couple of hiccups here, I think we're moving ahead at a steady pace. So I was not surprised by the Fed statement.
Agree with the word solid then?
Solid. I was pretty impressed by that statement, but I did think that we're look at the two last quarters. They were pretty healthy readings. We're expecting something around 3% for the fourth quarter and around 3.3% for 2015. Dior, what's your reaction here? How do you trade this Fed statement?
Well, I think Rick really nailed it when he talked about the international goings on. I mean, let's face it, the bond prices have just powered through the shorts like they were Marshawn Lynch beast mode. So he's really got a lot of money to say the U.S. is the place to be, and they're going to keep coming there until yields prove it otherwise.
But I don't understand what you're saying and what everybody's point is about international markets. What is the point about what the Fed's going to do here?
Well, I'll give you the point of... Real quick, there's not so much to say about what the Fed is saying they're going to do. It's that they're saying for the first time we're worried about international markets. So money
isn't that a dovish development?
Yeah.
Well, keep in mind. I mean, I don't know if you can go to me, but keep in mind that well, the ECB has made a pretty big move in terms of quantitative easing, and that's going to put more upward pressure on the dollar, which is going to hurt exports and certainly affect the economy. But another thing that the Fed could take it is that this also helps stabilize the Eurozone, something that they want to see, and that to me means that they could keep going along with moving interest rates higher.
Jack, the Fed statement would seem to play into your arguments that the market response doesn't. What do you make of this?
Well, give it a couple of days, Bill. I think that, right now the market is doing a lot of digesting, but I could not disagree with what Santelli was saying anymore. Right now, what these central bankers are more concerned about than anything else are the disinflationary pressures out there. And when our Federal Reserve is talking about the pressures outside or off of our shores, that's what they're referring to, the fact that we are not in a vacuum. And the bottom line is this. It seems like everybody becomes the Cassandra, the soothsayer of doom whenever we come off a couple of points. We are only 3 or 4 points off of our all-time high. Remember that. And what is really happening is that there
No, there's a disconnect. Everybody that is in your camp has been wrong, Rick. All right, they have been out here, and buying gas, and you think the best rally in the stock market in our lifetime. Not only that, come on, medication. You're talking about operating margins at all-time highs. You're talking about once ahead. You're talking about energy prices. You can't get away from globalization. Globalization is what it's about. And there was a time where everybody was talking about, oh, we only have a small percentage of our economy on exports. It's not what it's about. It's about earnings in the S&P, multinational. It's a global economy. Earnings are all time high together. You're going to get these.
Hang on, everybody, listen. Hang on. If the point about this being an international seed concerns is that it ultimately, we have to acknowledge that they're effectively acting as the world central bank here, not just America.
They have been everything. We have been leading guys.
Kelly, I think what's going on here is I think what the Fed is saying is there's a lot of stuff going on overseas that has the potential to impact the U.S. economy. They've been very clear that they need to take that into account. The development today is, and this is very important, folks, when something rises to the level to come into the statement, and not only into the statement, but in a way that it becomes one of the metrics or gauges upon which the Fed will change interest rates, it becomes a very big deal. So now what we're going to do when we talk about that metric of international development is specifically watch the European Central Bank and its new quantitative easing program. Is it working? Is it not working? Remember, the Fed is neutral about international development, only that it's watching it. So the story is this. If EQE, as I call it, because it's a lot faster than the other stuff, if EQE works, raises the inflation level, raises growth, gets Europe back on track, that could be in a faster Fed. But if it doesn't work,
expectations are dropping.
Well, okay, that's true. But what I think is something that needs to be taken away here, Kelly, is that the Fed, I think, was a little bit unclear. That the fact that we're having a debate here, whether or not there's a hawkish or dovish statement, I don't know that this redirects back to June or gives fodder for the dove that is further from June. I think the Fed needs to clarify here.
Let's close this out because we're running out of time. To Beth Ann, what do you think this means for Fed policy going down the road? We're all wondering when this is going to happen. What do you think they start to raise rates?
Well, we've been saying since last year, since March of last year, that they were going to raise rates in the second quarter of this year. We kind of narrowed it down to June, and we think they're still on track. That seems to be the case. We've also said that they're going to move. Actually, this might spook all the people listening on here, but we think they could actually raise 1.25 by year end. Now, of course, they might. There's a lot of things like we talked about, the eurozone issues as well could slow them down. They might miss a beat, but we think they're heading along that path. Jack, before we go, then, is this a signal to everybody who might have a mortgage or be trying to make a decision about interest rates that they are in fact going lower? Because all of your bullish talk on the U.S. economy would not point to this outcome, and that's still what we're seeing.
No, you know what I see is that big disconnect that I've been talking about that Rick and I always seem to argue about. You know, one of these days we're going to see this bubble in the bonds pop. And one of the problems that I have is that there are too many people that are looking at that bond market right now. And unfortunately for me, I see all risk and no return. Okay. And worse than that, they're going to miss out and maybe the best asset class in 2014.
Understood, but that's also what Jack Bogle told us. Guys, it's a theme we're going to follow closely here. Thank you, everybody, this hour.
Thank you.
Lively as we knew it would be. Always is after a Fed statement of some kind.
Boy, oh boy, just about 45 minutes to go into the close here. This tug of war, keeping it down roughly neutral. It's up about 31 points at the moment. The S&P a little bit weaker, so the broad market index giving up about 0.4% today, while the Nasdaq tries to stay positive.
Meanwhile, the other big story of the day, Apple skyrocketing thanks to that blowout earnings report you heard right here on Closing Bell last night. Apple selling nearly 75 million new iPhones last quarter. But is the tech giant becoming too dependent on that one product for its profit? We're going to hash it out with some of the pros coming up next year.
Also ahead, and this is one to watch. BlackRock's head of fixed income, Rick Reeder, will speak with us exclusively. They receive about $700 billion in assets, so we really want to hear what he has to say about these moves on the back of the Fed announcement and when they see the Fed pulling the trigger on an interest rate hike. Stay tuned. We'll be talking Super Mario on the next block. We're also one flashing loads of cash around in Europe. This guy, who's making loads of dough for Nintendo and could in fact be the company saving brains.
We're here to help you get up to speed very quickly.
You gotta be fast because the markets are moving.
And you get to talk to some of the brightest investors and smartest people in the world.
And did you believe that he said that on Clockbox? No one gets up earlier than this. I immediately go look at the overnight market. I tweet about what I see. Everybody can go time stamp my tweets. A lot of people don't realize it, but I'm part owner of it. Serve breakfast, check in people. It's people. I love working with people. You learn about service. I can relate the stocks to the story. David has the story. I tell you how to play it. Carl mentions the story. I tell you how to profit from it. I will not let anyone else outwork me. I just want it.
A new season. Golf's best tee it up as the race for the FedEx Cup begins again.
The wait is over for Jimmy Walker. He makes it to the winner's circle.
Watch all the drama unfold with 500 FedEx Cup points on the line at each tournament. Welcome to the 2014-2015 PGA Tour season.
This weekend,
Susie, I need your help.
Deep is dead and living a lie. Can a houseboat turn his life around? Plus,
It's just a bad habit.
stop spending, start saving. Quick tips to fast cash. The Susie Ullman Show.
We don't see the big direction will go down sharply. We believe the space will be more or less stable. Only some progress is possible, not with what that should if it's normal.
If we want to have continued production of oil and gas in Europe, we need to address the taxes. Otherwise, as we do this, we compete it out and have to go to the local scenario for production. That's the reality of the new price situation we see. This oil price drop is phenomenally helpful to the middle class, lower middle class in Europe, Japan, and the United States. We believe that middle firms will not go dramatically down below because of the structure of some of the firms. And I think we believe that within 2 years, the recovery is definitely going to be happening.
And so please recognize the level oil price to be for 1 year, let's say more than $100 billion. So that's another thing to turn out. We need to the opportunity to go abroad to buy oil.
All right, market's still trying to sort things out after the Fed statement. The Dow was higher, now it's lower, down 65 points. We're looking at the 10 sectors of the Standard & Poor's 500 index. Only one positive, thank you, Apple, up 5%. And energy is lower as WTI crude hits a 5-6-year low today. So it's down 3% right now.
Yeah, our Kate Rogers is covering some of the big individual movers for us. Hi, Kate.
So kick it off today with the energy sector moving lower as crude oil fell 4% to its lowest level since March of 2009. Chevron, ExxonMobil, Nabors, and Denbury Resources all falling on that. Now, Boeing also hitting a new 52-week high after the jet maker posted better than expected quarterly results. Investors also shrugging off its light guidance. It is trading up near 6.5% now. Hanes Brands, also the parent of Hanes Apparel, gaining ground after the company raised its quarterly dividend 33% to 40 cents a share and announced a 4-for-1 stock split. That stock currently trading up near 2.5%. And we end with Apple, of course, gaining ground today after posting its biggest quarterly profit in corporate history, boosted by record sales of its iPhone 6 and 6 Plus models during the holiday season. Apple today trading up over 6.5%. Back over to you.
All right, Kate, thank you very much. Well, Apple investors obviously loving the record earnings that came out last night for the last quarter, but it has many wondering if the company now has relied too much on one product, namely the iPhone. We saw a slowdown in sales for Macs and iPads and other items at Apple, but of course the iPhone was the big blowout this time around.
And joining us for more on whether this can continue, Edmund Lee from Recode with Michael Olbachowski from Concert Wealth Management. Welcome to you both. And, it's hard to pick an issue with Apple after the quarter they've just had. And it sounds like the products they may launch, including the watch, will drive more people into the iPhone ecosystem. Is there a risk of putting too many eggs in this one basket?
It seems like they could do no wrong, right? No, I know that people talk about, is this a one-trick pony company, especially now that iPhones are basically drive, a big, huge majority of their sales. I think the bigger read on this, though, is that the iPhone really, the way I see it, is a Trojan horse product. It just gets people into other Apple products, whether it's iPads or their laptops or their desktops. the forthcoming Apple Watch, as you mentioned. So that's their lead-in product. It's their anchor product. And it's not, in a way, it's not really a standalone. If you start to like it, it sort of gets you into their other lines. And I think longer term, it's definitely a positive for them. It's not like a one item thing.
Michael, you have to, yeah, I was going to say, you have to put money to work there. This does concern you, doesn't it?
Absolutely, and it's truly an incredible quarter and incredible, really was the pent-up demand for the large screen phone, large screen iPhone, and this quarter was truly amazing. But at the same time, the company is now relying 70% of the revenue is relying on the iPhone, and actually the iPad sales are slowing, and they went from 20% a year ago now to about 12%. The Mac sales actually really benefit from the halo effect probably from the iPhone and increase, but relative to the incredible performance from the iPhone, they are down below 10%. So the company is really relying on a single product going forward, and one would expect that for the next couple of quarters, the iPhone sales is going to continue to accelerate. It might be even 75 or 80% of their sales. So it is becoming a problem, and we've been waiting for this next great thing to come out, and so far there's nothing on the horizon that may replace those sales.
Michael, I don't understand why that's a problem at the moment.
Sure, it is not a problem at the moment, and it is a problem if you're looking at the past. But if you're a long-term investor and are looking at 3 to 5 years out, then it is becoming a problem. Each product goes through a cycle. We have seen the iPod sales peak and lower. We've seen iPad sales peak and go lower. So eventually it is going to happen to iPhone too.
And are consumers abandoning the iPad for the larger iPhone? Is that what's going on here?
I mean, you have to definitely think that there's some cannibalization going on, and I think the idea that they're relying too much on this one product. The other thing to note, though, is that they're still forging into new markets. China was huge for iPhone.
They're now number one now.
Exactly, and a lot of the signups, a lot of the new customers are new to Apple. So I think if they're getting introduced to the company, to like their product line this way, and I think it's going to take another iteration or two before you start seeing the larger halo effect of those new customers coming in and say, oh, I like Apple iPhone, I want to get their laptop, I want to get some of their other products. So it will come in cycles, that's true, but this is the first for a lot of customers, especially abroad, especially in China. And I think longer term, it will be a positive for sure.
Is it also, Michael, better for you as a shareholder right now than if they were putting money into other kinds of products that frankly may not pan out? I mean, why not double down when you realize you've got a gold mine?
Well, of course we should, and I think they are doing it, and I expect for the next 2, 3, or 4 quarters to iPhone to continue this way. But at the same time, when you're making all this incredible money, you should be investing in other products and looking where you're going to go next. And I think we have the Apple Watch coming out in March or April. Even with the expectations of 30 million watches sold within the first year, that is only a few $1 billion a quarter. So that doesn't move the needle. So we should be investing, and they are, but we haven't seen anything that we can point to. They're investing in the future into products that can eventually replace the revenue stream, where eventually the iPhone slows down. But so far, it's really hard to complain.
And I realize I'm not the demographic, but so far for me, the iWatch is not moving my needle. What about you?
Yeah, no, I think it's going to be, frankly, a bit of a tough sell. But, the truth of it is, a lot of their new product launches, whether it was the first iPhone, first iPod, for that matter, didn't do so great, at least out of the gate. It took a little while. It took another by the second generation, really, before it became a mass product. So even if it doesn't become a blockbuster out of the gate, it doesn't mean they're going to give up. It doesn't mean they're not going to do a second version of it really soon, probably, to entice a broader market. And I think that's, always a long play with Apple.
Won't be one and done, that's for sure. Gentlemen, good to see you both. Thank you. Michael, Ed, always good to see you. Thanks for joining us today. And we have a news alert on e-cigarettes. Jane Wells in California with that story. Jane?
Hey, Bill, more scrutiny for these popular products. I mean, it's a $1.5 billion market in the U.S., $3.5 billion globally, but now health officials in California, undoubtedly its largest market in the U.S., are warning that they need to be regulated like regular tobacco due to health risks, especially to children. A report released by the California Department of Public Health, according to the Associated Press, says e-cigarettes emit cancer-causing chemicals and get users hooked on nicotine. Now, the manufacturers have generally said that e-cigarettes are safer than regular cigarettes, There have been new reports this week of a lab test suggesting that e-cigarettes at high temperatures may release more formaldehyde than regular cigarettes, so there will certainly be more scrutiny. The FDA is still working through what it wants to do about these, but this is a big business, and I don't know about where you guys live, but out here, there are vaping rooms everywhere. A lot of people use these. Back to you.
Yeah, but I mean, if they're worried about the health risk of children, of course there are going to be health risks there. I mean, are they thinking about marketing to children for these things?
I think they're thinking that kids may see this as a safe alternative to smoking. Yeah, you do have to wonder, Jane, as well about some of the health concerns involved with the same kinds of outcomes from marijuana. You do, and of course a lot of people vape marijuana as well, thinking that is safer than traditional smoking, and of course marijuana you can go with edibles, with nicotine you can do a lot of other things, but they are saying that they are concerned in California that this has cancer-causing elements about it and needs to be regulated just like regular cigarettes. The FDA is still figuring that one out. Other states have moved in this direction as well, but California, of course, the 800-pound smoking gorilla in the room.
Yes, it is, as usual. Thank you, Jane.
Thank you very much, Jane. And see if there's any movement in some of the companies who figure exposure to e-cigarettes. We'll keep an eye on these tobacco names, which otherwise have been attractive yield plays, frankly, in this environment. All the more so today.
Down 75 points right now with 35 minutes left in the trading session as the market continues to drift lower here today after the Fed's announcement and the price of oil moving lower. So energy among the biggest decliners today. The S&P is down 14. The NASDAQ positive early on because of Apple's earnings, now down 14 points.
And another barrage after the bell of key earnings today. Facebook and Qualcomm front and center. We will have the numbers you need to watch out for coming up.
Plus, BlackRock fixed income guru Rick Reader standing right here before the exchange. We'll talk with us exclusively about how he's putting his clients nearly $700 billion in assets to work and how he sleeps nights doing that. And we'll talk Fed policy, global central bank easing, and what he's most concerned about in our economy. Coming up.
This is all being done actually ahead of the Chinese Lunar New Year, falling on February 19th. So to the extent that people were talking about the iPhone 6 as being a gift of choice for the year-end holiday shopping period, clearly you've got more momentum going into what's going to be a critical first quarter in China for Apple. To the extent that Apple is now in with a phone that's as large, if not slightly larger, certainly there's a great deal of pent-up demand for Apple. We expect this momentum to continue.
Stronger dollars crimping the results of some companies over in the US, but with a weakening euro end up helping companies on the continent. It's European Earnings Central here on Capital Connection. As European markets come to life, there's one team you need, delivering the news, views, and market action to get you geared up to trade, where business leaders turn first. Squad Block, each weekday at 2 p.m.
It was another top 10 season in the FedEx Cup standings for Matt Kuchar. The 13-year PGA Tour veteran claimed the trophy at the RBC Heritage, post his 7th career win.
Oh my goodness! Matt Kuchar! Oh my goodness!
Kuchar added 11 more top 10 finishes to his resume on the season to bring his career total to 68. Watch the PGA Tour all season long, right here.
On the Money interviews the people making the news and brings you the latest market and economic information that impacts your money. On the Money this weekend on CNBC.
All right, we got a lot of things moving here.
Welcome back. Here's a look at what's happening, first of all, with the New Zealand dollar, often referred to as a commodity currency. Typically tends to rise during periods when commodity prices, especially the softs, are doing better. But in any case, points in the last couple of weeks with surprise rate cuts, concerns and commentary about the strength of their currencies as the U.S. dollar and others, for example, the euro, have moved around. Today, the New Zealand dollar is taking a hit against our dollar. You can see it there, off by more than 1%. There are some headlines suggesting that perhaps they're trying to talk about their concern about the high level of the New Zealand dollar. The impact is here, but the real question, Bill, is whether the central bank ultimately will follow suit with some of the others and be more proactive in cutting rates.
A positive report from the Fed, although they did acknowledge concerns about the international economies out there. But as of May, the Dow's down 94 points just off a low. It was said a moment ago we were down 105 on the industrial average. The S&P's down 15. The Nasdaq has moved lower. Even after those blowout earnings from Apple. Let me see the 30-year if we could, very quickly. There it is, 2.29. Yield on the 30-year bond is at a record low by 7 basis points, as a matter of fact. We're at 2.29%. As the debate continues about when the Fed will finally hike rates. Yesterday here on Closing Bell, Morgan Stanley's top economist said it wouldn't happen until March of 2016. Let's listen to that again.
We don't bottom until October. So that's going to have to lead the Fed to a change in rhetoric. They're going to have to move away from that promise to raise rates around mid-year because it's just no longer credible.
Reaction now to all of this with BlackRock's fixed income chief, Rick Reeder. Rick, I don't know where to start. Can you address what this move in the New Zealand dollar and whether this should have any bearing on the fact that our market is now off 100 points?
Well, I think there's a series of things going on. You go back a week ago, 2 weeks ago, think about what happened to Swiss franc. You think about what's happening in Australia. You think about central banks now have to respond to what is an extraordinary set of policies in the world today. You know, when you think about what the ECB just did, the amount that they're going to take out of the markets, you think about $60 billion a month. It's extraordinary. You're going to force rates down, and much of the reaction you're seeing today in the U.S. is for that very same dynamic, as you're forcing rates down because of extraordinary policy.
So our Fed said today that they see, for the first time, they use the word solid. They see solid growth in our economy. All things being equal, interest rates should have gone up on them in expecting the Fed to raise rates at some point. They've gone down. That's a response to what's going on overseas because they express concern about what's going on overseas.
So I think, the report today was pretty balanced. I mean, as you said, they said solid growth, they said strong payroll. Right. So that was pretty significant, and it basically gave them the flexibility. If they're going to go middle part of this year, they're going to go. They certainly have opened up the window to that. They also downgraded the inflation forecast, as they had to in the short term. But they also brought in the international, and so we've had a number of debates about what does that mean. And you think about what's happening in the global sphere today, of blooms and JGBs and everything getting forced down. You've got a dynamic where our earnings pretty balanced. I think truly flows matter more than anything else. And in today's environment, the flows are there's not enough bonds relative to the demand for income in the world today and where policy is going.
This is just so fascinating. I mean, I hope people can appreciate how unique a period this is right now. I mean, to basically have a situation where Europe announces quantitative easing, a massive program, right? And its bonds continue moving lower, and then that may be dragging U.S. bonds lower. Then our Fed is out there talking, getting rid of the considerable time language, introducing the patient language. Our bonds keep rallying. Was any of this supposed to happen?
So when you think about what is fair value, so 10-year, depending on how you measure fair value in the 10-year, probably closer to 3%, maybe 2 3/4. You're thinking about where we're moving, but then you put that in context. Fair value for Italy is 200 to 300 basis points cheaper than where they are today. And it's just because you're forcing this incredible policy and the tremendous amount of bonds coming out of the marketplace in a time where people don't factor in enough. The world's delevering. You're not producing enough fixed income, and then policy's taking so many bonds out of the marketplace that you continue to press yields down. And so we move to these extraordinary conditions.
Should all these central banks buying bonds just stop doing it altogether and just move interest rates into negative territory if that's what they're trying to achieve? But the European Central Bank is doing that as well, and some of the others.
Yeah, so I think part of what the Fed, I think, has a window to do here is literally to start moving, because you've got this. And you think about what's more important to the U.S. economy today is long and interest rates. It used to be the front end of the curve is so much more important. You've got the most extraordinary window in history to start to evolve your policy, because everywhere else in the world is zero, and the back end of the curve is not going to move much. And look at today, the back end is what's really, as you pointed out earlier, the back end that's really moving. The back end is going to stay down. The mortgage is important for corporate
finance. Why are you arguing that gives the Fed room? If anything, doesn't that indicate that they have no room, that somehow these long
we're approaching neighborhood full employment, and the Fed's mandate is full employment and price stability. So you think about that, full employment, but price, we're in a low inflation world, which we can...
that full employment is going to have to change. I mean, that's got to be lower, right? When we hit 5.4 later this year, they're not going to be raising rates because of that. You're going to have to see it go much lower than that, don't you think?
I think the Fed has a window that they can start moving in the middle part of this year. And by the way, a 0% funds rate, when on average, you're talking about the last time we were on average, when you've seen this sort of payroll growth, it's closer to 7 over the last 30 years. 0 is the wrong number.
Or the long end, just throw it out the window. It doesn't matter. It has no bearing.
The long end of the yield curve?
Yeah.
So I think today, I mean, part of why in our portfolios we like owning long end interest rates is they give you part of a balanced portfolio. Long end treasuries, long end munis give you a balanced portfolio, and we think that stays fairly insulated as the Fed starts to move the front end.
The Fed continues to said, and they said it again today, they think the lower inflation and the lower oil prices is only temporary. And maybe by the middle of this year, we'll start to see them go up again at this point. Do you agree with that? And are we headed for a deflationary period as a result?
Certainly heading to a deflationary period. I think it's something that's extraordinarily important. The reason why you have a supply glut that's in oil today is because the technology changed the supply paradigm. Technology is changing the world today, and price transparency, logistics, inventory management, and you look at the companies that have done well in the last couple of days on earnings, all of these are creating an incredible disinflationary impulse that you can grow without the same level of inflation that you had prior. Meaning, we could be at full employment and price stability, but price stability is at a lower trajectory.
What the Fed wanted people to do when they lowered rates was move into risk assets, right?
Yeah.
Well, stocks, which we did. Now we're not. Dow's down 141 points here, even as they're buying these bonds. Does that make sense here?
Yeah, I mean, I know you have to put it in the context.
I mean, I know one day is not a trend. So, you know what I mean?
Yeah, no, it's over. Today's price action across dollar and rates is curious or interesting in a number of regards. If you think about it, I mean, I think by the end of this year, the equity market will be higher, and I think we will achieve where these rates are, where companies are able to borrow money, and their ability for M&A or CapEx or equity repurchase is so extraordinary, and I think that's what confounded people for 2 years. The benefit accrues to equity holders. So I think when you step back and look at where we're going to be over 6 months, 9 months, it has to promote a higher equity market.
Such an interesting line. No, Rick, thank you for being here.
I really appreciate for you to be here. Thanks very much.
All right, we've got just under half an hour to go here on this market day where Bill mentioned stocks near the lows of the session. The Dow's off 130 points. The S&P is giving up 19. The Nasdaq is down 27, and the VIX up a couple of points.
All right, coming up, show us the numbers. Here we go. Facebook and Qualcomm will be posting their earnings after the bell today. We'll show you what the street is expecting and get you the info the moment it hits the tape. We'll break it all down with our full team of experts coming up.
And up next, why Bitcoin may be here to stay. Two pros tell us why they think the virtual currency will change the world for the better. Paul Venia, that utopia. Come right back.
I do believe that Apple is going to continue acquiring. They spent $500 million here, $300 million there, and they build up from the context of what they call strategic investment. I don't discount that they could possibly do a large acquisition, but I don't believe that's really their normal way of doing things. Secondly, with that kind of cash flow, you can bet that they're going to return part of that cash back to the shareholders.
Many economists are starting to push out the start of the Fed's first rate hike this cycle. We'll look for clues as the FOMC wraps up its meeting.
That's what's up next. Facebook posting numbers will get all the details and analysis you need to know about.
A new season. Golf's best tee it up as the race for the FedEx Cup begins again.
The wait is over for Jimmy Walker. He makes it to the winner's circle.
Watch all the drama unfold with 500 FedEx Cup points on the line at each tournament. Welcome to the 2014-2015 PGA Tour season.
Unlucky. This one's for my family. This is war.
Take that, Pastor. Get it. Knock it out of you.
Doesn't miss the next
boleh.
The Tonight Show, starring Jimmy Fallon, Saturday from 9 p.m.
Ajak 10 teman menjadi pelanggan First Media. Dapatkan hadiah istimewa mesin Nescafe Dolce Gusto dan voucher belanja hingga Rp500.000. Ayo, gabung sekarang.
Sekarang, semua bisa menyaksikan acara favorit masing-masing. Yang mulai dari setiap TV, kualitas high definition, tanpa biaya pakai tambahan hingga 4 decoder. Untuk berlangganan, First Media sekarang.